welcome back. This is After the Bell. More from Earnings Corner. WNS has just come out with their second quarter earnings numbers, and let's go across to Kritika, who has the management with her to take us through the highlights of the quarter. Kritika.
Thanks for that, Alan. We are now joined by Keshav Murugesh, the CEO of WNS. Thanks for speaking to us, Keshav. The numbers have certainly come in better than what we were expecting, but there are some concerns definitely. To begin with, margins are looking stable at 150 basis, at a hike of 150 basis points. Give us some more color on the margins. Has the pressure on wage hikes reduced, and how has currency aided to the margin picture?
Okay, yeah, thank you. I think, first of all, we are very enthused with the results again this quarter. Once again, we have grown both revenues and margins.
Right.
And from a margin point of view, Kritika, our gross margin came in at about 32.8%.
Right.
Sequential growth of 1.5 percentage points. Operating income also was higher against the last quarter by 1.5 percentage points. So we have obviously absorbed the impacts of wages and all of that into these results. And interestingly, we've also focused very strongly on our technology-based programs that are driving higher productivity. So you will actually see that our revenue per employee this quarter also went up. So overall, we think it's a very solid performance. Okay.
I also don't have the volumes figure with me, Keshav. How has the volume performance been on a sequential basis?
Volumes actually were up against the previous quarter. As you saw, if you look at on a revenue, from a revenue point of view, year-on-year revenues were up about 7.6%.
Right.
And sequentially up 2.4%. After adjusting for currency, the sequential revenue growth was actually up 3.1%. So the bulk of this was really driven by volume growth and very little really by currency.
Okay. Sector-wise, where did the volume really kick in? Because there was a little amount of concern that we were witnessing in the banking and insurance space. Give me an idea about what really were the sectors that led to the volume jump.
Sure. As you probably know, WNS has been, investing very strongly in its transformation journey across the last few quarters. And for us, the growth we have seen is essentially around insurance, our consulting and professional services areas, our healthcare vertical, manufacturing, retail. So essentially broad-based across each of our, core verticals. And from a horizontal point of view, very strong growth in the finance and accounting areas as well as the
quantify that for us, Keshav, the exact growth that you've seen in the BFS space particularly? Because that's been an area of concern.
Yeah, so BNFS was about 11% or so, but I can tell you that insurance was 20%, and consulting 18%, healthcare 15%. So overall, from our point of view, quite broad-based across all our verticals and our two core horizontals.
Okay, taking from that, you've added 3 transformational deals this quarter. Can you give me an idea about what bracket this falls into? Is this above $100 million deals?
All of them, we would like them to be large deals, Kritika. Now, not all of them actually fall into the $100 million deals, but I'd like to say that WNS actually is playing in a number of large-sized deals. And for us, large-sized deals are essentially deals which are ACV of $10 million and above.
Okay. Keshav, I wanted some color on the shelf registration that you had filed for recently. Simply put, I'm going to frame this bluntly. Does this possibly pave the path for one of your larger shareholders, Pincus, to look at exiting the company?
Not necessarily. So actually, great question, and I'd like to answer that head on. I think the key thing that we did, over the last few months was to do a kind of a survey with all our investors and analysts. And based on the outcome of that survey, we decided to address, some of our issues head on. So first thing is, I think the shelf registration essentially is not an intent to sell at all. It is just an administrative transaction to register shares. It just makes the selling process easier in the future. The focus really is to enable the company to raise equity to fund our exciting new growth investments that we want to do. The second is it addresses specifically a concern that a lot of our investors and the analysts had, which was around liquidity of our stock.
Okay.
So we expect that through this it will address it. And then most importantly, it enables Warburg Pincus the flexibility to diversify and capture returns while allowing an orderly exit over time, in concert with the company. So I think the whole, key here is it really allows them also the ability to exit in parcels as and when they think it's the right time to do so. I think the key here is they're extremely supportive of management and the strategy of the company and are actually, very, very confident about the long-term growth prospects of the company and the business.
Also, quickly, Keshav, does this also mean that you could look at raising funds? If yes, how much?
Yes, absolutely. In fact, the primary quotient of the shelf actually talks about a limit of up to $50 million.
Okay. All right. Thank you so much, Keshav. We are just running out of time. Congratulations. It's always a pleasure to talk to you. So, Elan, WNS numbers have come in better than expected. Little bit of concern, but clearly management seems upbeat.
Right, Kritika, just to harp on what the management said about whether there's an indication of Warburg Pincus's exit from WNS, what really did you pick up from what he had to say?
Well, clearly, as you heard Keshav point out, this doesn't necessarily mean that Warburg Pincus is immediately going to go and sell out. But what really happens, simply put, Elan, is that after the shelf registration, this will make Warburg's exit simpler. So what they will have to do now is seek SEC approvals. Of course, this shelf registration hasn't been approved by the SEC. So once that does happen, it will make Warburg Pincus's sale easier and they could look at selling in the open market. The process will be simpler. If at all it will happen, of course, this has been a talk that we have been talking about since quite some time. The management is rather upbeat about the growth prospects, but then again, it's a PE player. We could eventually see an exit. When, of course, it's not defined by the timeline, but from what I have picked up from analysts, from a lot of discussions, this just makes the process simpler and could be a precursor.
Right, so could happen, and if it does, the process will be simpler. That seems to be the crux. Kritika, thanks so much for joining us with that. Let's talk about